Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming in and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, please call your registered investment advisor or call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent job, D.
Yep. So let me share my screen, Will. And if you guys are joining us for the first time, if you have any questions, it could be Market Chameleon tools, data analytics. You want to share strategies that you've been that have been working for you, or you've seen something unusual you want to share with the rest of the community, you're welcome to come on. There couple ways to ask questions. You can put your questions on the live chat on YouTube. Will's watching and he'll read it back to me. We also put out a link to Zoom. If you click on that link, it takes you over to Zoom. Once you get to Zoom, click on raise your hand. There's a button, raise your hand. Then you'll be able to ask your question direct. Everybody's going to be able to hear you. You don't have to turn on your video camera. But those are two ways to ask questions.
We did have one first question, D, from Jace Jones. He's a new subscriber.
Okay.
He's asking, how can I find instructions on how to use the site?
Okay. So I think it's a good question. I get a lot. And what Market Chameleon is, it's a research tool, right? So there's no like steps to use the website. It's really depending on what you're trying to do. And you know, so for example, you know, how do I use Excel, right? Well, it's an application. It has functions. So it depends on what you're trying to do. That's the only way. So there's no like, it's not like a platform where it tells you, you go here and you have to take these steps and actions. You know, so to do research, it's kind of like any website that you would do research. There's data, there are tools and analytics to research things from different perspectives. You know, maybe you want to do research on earnings or earnings moves. Maybe you want to do research on fundamental, or maybe you want to do research on implied volatilities. And that's the kind of things that you're capable of doing. It really, though, depends on what you're looking at, you know, what you're trying to do, what type of data you're trying to analyze. So, you know, I do get this sometimes where people just kind of just ask, okay, well, you know, how do I get started? I think that it depends. Well, what are you trying to do, right? Then I could kind of give you ideas, well, where to go find things and how to get started.
And that being said, there is an incredible library of videos around all aspects of the market that we've done over the last 3 years. You can find that on YouTube. There are links on the website. So there are lots of places where you can see how we have other chameleons who do videos. So
right, and that's why we do this show.
You can go to the YouTube channel and actually search by topic and find videos on how people are using Market Chameleon to do their research. So
yeah, and people who are using Market Chameleon already have an idea what they want to research and what ideas of what they want to do. Then they come to Market Chameleon to use the tools to assist them in that. But that's probably, you know, if it's without having a specific, you know, question, you know, that I would say, like, well, if you're looking at something, stock, a strategy, trying to analyze, then we could help you out with that. and point you in the right direction.
And every day we have this show, it's live. There's a link in the YouTube chat, like Dimitri mentioned, to the Zoom. You can come over and ask questions live. You can also email support@MarketChameleon.com with any questions. And D does a real nice job of answering them the next couple days on the show. He always goes through the email and looks at them. So with that, D, what's the pre-market look like?
Yep. So this is pre-market report, and these are stocks that are trading in pre-market hours. We got our most active stocks, biggest percentage gainers, biggest percentage decliners. I see we got 67 stocks on our percentage gainers list, 80 on a percentage decliners. So from that perspective, we're looking at a slightly bearish bias at the open. I'm going to filter out this list for just stocks that are in the S&P 500. We'll take out small cap stocks, ETFs, leverage products, preferreds, all those other types of securities, just to focus on what's going on in the S&P 500. So to do that, I'm going to use this filter here in ETF and drop it down, and I'm going to select SPY. That's the S&P 500 ETF. By selecting that, this list gets filtered by the holdings of SPY. So you can see here, 12 made our percentage gainers list, 24 in the percentage decliners. So again, here we have a slightly bearish bias at the open. The big one that I'm seeing right now is Tesla. They reported earnings, and we see up 2.9% in the pre-market hours. So I was going to take, maybe while we're waiting for any more questions to queue up, take a look at Tesla, and maybe just from the evaluation, we're going to use a simple calculator to kind of say, where do we think Tesla should be approximately valued. Okay, so it's a simple calculation, really, and usually that's how it starts out until you kind of look deeper into it, because Tesla's one of the high flying stocks, right?
Yeah, perfect.
So let's take a look. So when I go to Tesla, and we're going to try to, before we use our calculator, let's just take a look at what Tesla reported. And this is, if you go to, Tesla here, they just reported earnings. You can download this shareholder deck. And a couple things that I'm gonna pluck out of here is their operating margins, right? 14.6%. So that will be important for us, because what this is saying is for every dollar of sale they have in a car, they keep 14.6 cents. Okay, that's their operating margin. So they're right now at 14.6 operating margin. I think that fell slightly, but we're just going to use that. And we also want to see if we could project like earnings growth. So let me step back and actually describe what this calculator is doing. So there are a couple ways, to try to value an asset. And one of the ways is, well, how much does this asset yield? Okay. And if the asset has an earnings, so let's just say a piece of property, a house, right? If the house generates $10,000 in rent, that's your income. If you pay $100,000 for that house, that's a 10% yield, right? So you're getting a 10% annual return on your invested dollar. If you pay $200,000 for that same house and you still earn only $10,000 in rent, well, now you're only yielding 5%. So same house, same rent, but you paid a different price, and now your return on invested dollar goes down, right? If you pay $1 million for the house, same rent, except now your return is only 1%. Okay, so that's the idea. We know how much we pay the Tesla cost because we could figure out the enterprise value, right? Market cap, plus debt minus cash. We could figure it out if we bought the entire thing. The hard part is, well, how much earnings are we expected to make over the time horizon, right? And that will be our yield. And then we could compare that to other assets and other investments. So if we could make better returns on different stocks, potentially that are more predictable or less risk, then the alternative could be better. And like Warren Buffett kind of says, it's how much cash you're going to generate on your investment. It doesn't matter if you're selling cars, doesn't matter if you're selling pens or notebooks or sneakers. At the end of the day, how much return in cash did you generate on your investment, right? That's the idea. And what do we compare it to? Well, the first benchmark is the S&P 500. Is it better to just stay in the overall diversified market that you get a benefit of diversification, overall growth, money always getting pumped in? Or do you take money out of there to get a superior return in an individual stock? So that's kind of what the point of this calculator is. So a couple things that we need to know is, well, how much are they going to earn, right? And to do that, we need to know, well, what are their profit margins, the stock's profit margins, what are their revenue, and what are they revenue expected to grow year over year, right? So we kind of need that to project our earnings. So think of it as you bought a house and it generates $10,000 in rent, but if you're expecting the rent to go up every year by 3%, so the next year the rent will go up, the following year will go up again 3% and again. So you can see that you need to project that growth in your earnings. So let's do that right now with Tesla and try to figure out where do we think, it should be priced relative to the rest of the market, right? So that's the simple calculation. That's kind of how you want to do a first approach. To do that, we're going to use their earnings and guidance, right? So here we kind of see the first thing is their profitability. And this is what they're telling us. So far, they've generated, for every dollar in sale, 14.6 cents resulted in a profit. Okay, so that's the profit that they're making from their core business, their core operations, 14.6%, which could be pretty good in automotive, in this space. But we're still comparing it to the rest of the market. I see gross margins 27.9%. So I'm going to use this 14.6% for now. I think it was, let me see if I could just show you guys really quickly. So here's the operating margins. And here's how they've been, moving around. 19.2% last quarter, dropped back to 14.6. So let's just use that for now. Going forward, let's say that would be their average operating profits. It could go down, but let's use that as our starting point, 14.6. All right. So I'm going to go back to my calculator. So operating margin here, I'm going to set this, let's set it to 15. All right. Which, by the way, that matches the S&P 500. So their operating margins are similar to what the S&P 500. All right. So in that case, let's see what they're expected to grow. And right now we're using, for the rest of the market, that their revenue growth is going to be 7.3%, which is that 3-year average. So to get Tesla's growth rate, and it's pretty hard. I think they said that they grew last year 45%. we could take a look at maybe even here, let me bring up another Market Chameleon. We could look at their year-over-year growth. So let's just take a look at how they've been growing year over year. So right now I'm on their quarterly, I've dropped it down, year over year growth. So you can see here 80%, 65, 50%. So they had some pretty high growth rate, especially in the last 2 years. All right, so here I'm seeing in the range, low 40s all the way up, almost 100% over here. And let me just take a look at the outlook here. I know on page 10, they give you their own outlook. I think it was on page 10. Let's see. Here we go, outlook. So here they tell you how fast they expect to grow. It's not really in revenue they're talking about, but in vehicles delivered. They're saying they're going to grow at 50%. So let's use that as our benchmark, that they think they're going to grow year over year by 50%. Okay, so that's what we're going to use as our initial growth rate. And I'm going to recalculate this. And if we take all these assumptions here on our simple calculator, then we get an implied value of 435. So what does that mean? This means the following, that based on where the enterprise value is of Tesla versus the S&P 500, right? We're going to see that, yes, Tesla is going to grow, their revenues pretty quickly, and they're going to generate more and more profits every year. So you see here, every year, more and more profits. So at the end of 5 years, we're projecting that they're going to have massive profits over the life of that 5 years, 184.5 billion, versus we could see here S&P 500 will grow slower, right, with that much profits, 14.2 trillion. So what is the return over those 5 years? What are for every dollar invested in SPY over the 5 years is a 40.9% return. But for what we're paying in Tesla, for every dollar, the return is 24%, right? So you could see here that even given these assumptions, it's what matters is not just the earnings, but what you're paying, right? That's what we talked about. If you're paying $100,000 for a house that earns $10,000 a year, that's a 10% return. Same house, you pay $200,000, it drops to 5% return. So just to say, where would we price Tesla just to equal this, this to normalize it? That's what the implied value is. All right, so that's just one consideration. It's one way to kind of look at it, and maybe project even higher, higher growth rates, higher margins, and you can play around with that. But it's one way to say, okay, I know a stock could go up forever, especially if people want to pay more for the stock, they're going to pay more, and that's where it's going to go. This is more of looking at it from fundamentally, where do we think things would, if value investors or people looking at it from a fundamental perspective, where would they step in potentially? That's kind of what we're looking at. Okay, that doesn't mean it's going to go there. Again, retail investors, where you can buy stock and hold it at any level, they want for a long, long time. So that's just one exercise. I'm just showing you And I'm showing you guys these because I am improving on this model. And it'll get a little bit more in depth using more factors. But just kind of wanted to start out from the simple approach, get you guys used to like seeing different approaches for using valuation models.
What's the stock done over the previous earnings? After the earnings?
After reporting earnings?
Yeah.
So let's just take a look here. So this here is showing the stocks, what the stock did the day following earnings versus what the options were predicting to move in either direction. So you could see here that, you know, these bars here, that's the from month option straddle implying a move up or down. So if you're buying a call, buying a put, you're buying premium in both. So the stock has to move up or down to cover the premium you paid for both call and a put, right? And this is what it did. So here it looks to me that it tended to move below, at least for the last, you know, I don't know, we could take a look here, right? That the market overestimated the move 77% of the time. So they were predicting on average a move of 8.4% versus actual 6.2. If we just want to take a look at the stock patterns and see how it tended to behave after reporting earnings, here's the day of earnings. So you see 64% of the time, Apple tended to gap up in the morning after reporting earnings, 36% time lower for an average gain of 4%. And the average move up or down 5.7%. After opening up, so stock initially reacts to earnings, you know, opens up or down. The rest of the day, from the open to the high, on average, it moved 1.8%. From the open to the low, on average, moved down 5.5%, which is telling me that the volatility to the downside tended to be greater than the volatility to the upside. And by the end of the day, 64% of the time, the stock tended to close lower than the open, 36% time higher for an average loss of 3.3%. So that's how the stock tended to behave after reporting earnings.
Very cool. Thanks, Steve.
Yep. So I guess if there are no other questions, I'm going to just stop right there, Will.
Perfect. All right. Thanks for all the information. The Chameleons, thanks for joining us today. You have a great day, my friend. Appreciate it.
Great. Thanks, everyone. Stay safe out there. Have a great trading day and hope to see you guys tomorrow.
Trade in peace, community.